Hello, everyone. Kenneth Travis, another episode of the Loan Officer Experience podcast. And today we're sitting with the man, the myth, the legend, Michael Brenning with eLend. We're going to talk about eLend and the rebranding,
Sounds
formerly
good to
known
hear you
as
say that.
What's that?
Sounds good to hear you say that. eLend.
Yeah.
Love
Yeah.
that.
I love it. I love it as well. Um, Michael, welcome to the show
Thanks.
again.
Good to be with you again. Good to
It's
see
always,
you 5 short days after I last saw you at Fuse.
hey, man, what'd you think about Fuse? How was it for you as
Lit,
on the lending
lit,
side?
on fire, like goosebumps, goosebump memories for a lot of reasons. I
Yeah.
think the work you all put in, you and Jonathan, Jen, everybody, everybody, the work that went into that is, it's a lot of work. It's without parallel. I mean, you just look at all the vendors and lenders that are there, all the attendees that are there from a broker standpoint. We were obviously in a spot you all helped us with the rebrand, and goosebump moments when Jonathan kind of stopped the party night one, right? And said the words that he said about kind of where Rob and I have taken the company, and the team has kind of bonded together with broker feedback and making all the moves that we've made technologically and process wise, and to have him say those things in front of the community and then hand the microphone to us and allow us to say a few words and pull down that curtain and kind of really unveil the new identity. AFR is no more. eLend is here to stay and here to grow and here to get better. And that's really what he acknowledged. That was really important for us to hear Jonathan acknowledge that and say that in front of the community. Like, we've been head down grinding. I think I went gray even faster than I was before over the last year with Rob in the lab, just beating things up and changing things. So it's nice to have a name now that resonates, that sounds clear, it sounds more pure, kind of ties to what we're doing. I mean, to us, eLend means we're trying to elevate. The E is to elevate the experience. It's to bring excellence. It's to be digital and tech forward and kind of present more of a modern image. And that's what y'all allowed us to bring forward at Fuse. And so it was a home run success for us. I got goosebumps multiple times with the reactions, not just that night, but the ongoing reactions from the community as they stopped by. We had, times where there was 7, 8 people deep, and that's not something that the old AFR had, right? The old AFR had people flying by and passing by and kind of giving us dirty looks and talking about the past on OTC loans and reno loans and horror stories of yesteryear. That's not who we are anymore. So we needed the new identity to reflect, the path forward and who we are today. So what did
Yeah.
you think of Fuse? What were your highlights and takeaways?
Well, I think everything you said is spot on without question. There was a different energy in the room, and someone that was not only in it, I was behind the scenes with John and the team and the AIME team. And, there's so much that goes into those things. Yes, there were things that went wrong, and we wanted it to be a better experience, a better membership and lender vendor experience. We wrote down notes. We actually, decompressed. We kind of went over how we can be better, and small tweaks make a substantial difference. Now, with that said, I don't think anyone felt it, right? But there was,
No, didn't see any of it.
yeah, it
Didn't
was,
see any of it. You guys did a great job of hiding or masking anything that
yeah.
came up behind the scenes. That's for sure.
But that's the thing about John is he likes for things to be, let's look at what we can be better at. And I think that the knowledge that was dropped, I think that what does it boil down to, right? What's the purpose of Fuse? Well, it's to empower brokers and loan officers to go back to their communities and be able to help more people make the dream of homeownership a reality.
That's absolutely right.
I know that's
Absolutely right.
cliche-ish. And sometimes
Yeah.
we get caught up in the, in the moment or in like what's in it for us, right? So to speak. But it's really not about that. It's also about the lender partners and the vendor partners and really putting as many people, as many brokers and loan officers in front of them, because that's how we're going to get served. We lean on you guys, Michael,
That's right.
to learn, to create relationships with, and then take your tools and apply them in our community. And that's the whole purpose. It's to empower brokers. I thought it was phenomenal. I've never seen an exhibit hall like that. And I don't know what it was. Part of me said it was the DJ over there doing his mixing and his music and just giving it this vibe. But when I looked up, I remember a moment where I just gauged the room. I don't know how many hundreds of people were in there.
That's
and when
right.
you guys had a moment and like we pretty much shut down the exhibit hall for, 6 or 7 minutes, however long it was, we had everyone's attention.
Yeah.
And I love that's
incredible.
rare to be able to get people to shut down and for you guys to make your announcement, do your name, announcement. It did, man. It gave me chills as well. I thought, man, this is what's up? And it,
Yeah,
dude, we had other lender partners in the room, we had other vendors in the room, and they participated in it, and they
it
were,
was cool to see.
it's cool to see, there's a lot of division in our industry sometimes. And I've seen a group of industry come together regardless of where they stood in it.
That was neat for us. We had, 4 or 5 of our key competitors come over and compliment us on the new look and feel, compliment us more importantly on the changes they've felt competitively over the last 12, 14 months we've been working at this thing. And you don't get that very often, right? It only in an environment like AIME Fuse, where it is one large community, which you get feedback from your competitors, not smearing you, not denigrating you, actually coming up and having conversations and congratulating you on the improvements and
Yeah,
and saying that they're worried and they want to, they know they need to sharpen their pencil as well now, right?
sure.
So
Well, what would you tell someone that was not an AIM member that was considering being a member? I kind of felt like we pulled back the curtain and was like, hey, we're gonna not only be an organization to bring people together, and we've got some, we're gonna of course advocate and protect the industry, but we also want to connect people. But we also want originators to be able to have that sales and marketing piece
yeah,
that a
I,
lot of associations don't do.
so much value that was available to attendees, and that's what you missed. The value is not just the big stage, main stage presenters. Where there's some great motivational speakers and some very known industry, CEO types up on stage. But I think the bigger value gets unlocked in those breakouts from 7 in the morning until 3 o'clock in the afternoon on Friday, and the first half of the day on Saturday. My wife, who's a new broker, Lone
Right.
Loop here in Florida. She
Awesome.
attended for the first time. She's never come to a conference with me before. And for her to see all this firsthand, and then she sat through 5 or 6 hours a day of those breakouts, she walked away with piles of notes. Thankfully, she had an AI recorder, so it translated it all for her. She didn't have to go old school with the notes, but she walked away saying, wow, the impact and the knowledge that I came in without and walked away with, I would say that's the biggest thing that somebody that's considering joining AIM, you're missing out on the education and the tools and the ideas that come from those breakout sessions.
Yeah, I couldn't agree more. It was a community, it wasn't a transaction. It was the
Yeah,
people that made it
right.
such an amazing time. So I
Yeah.
just, man, we're looking forward to it. We're already planning for next year and had a meeting just this morning, and it's going to be
Takes
fun.
that long, doesn't it? It takes
Yeah.
364 days. You just wrap up and you're like, oh, we got to start talking about this again.
Yeah. I was
Wow.
like, are we really having a conversation about Fuse 26? Are we really doing this? It feels
Doing
weird,
it.
So,
Doing it.
um,
Definitely doing it.
well, let's jump in. What does this rebrand mean for you and eLand, and how does it reflect the company's direction moving
Yeah.
forward?
There's nothing I will say negative about AFR and its history. It's 28 years old. It survived how many cycles is that? 7 or 8 different
Oh,
cycles.
yeah, good and
They
bad.
pivoted,
Yes.
yeah, good and bad. They pivoted through products and processes. What the old AFR stood for to Rob and I, and remember, he was an owner in the previous regime before he came back and relaunched it with me and the rest of the team. The old AFR stood for niche products and niche processes, and that's great. But the marketplace doesn't really call for that anymore. We wanted to go mainstream. When you go mainstream, you've got to bring the game. You got to bring the heat because there's some amazing companies out there that brokers already have access to. And so we knew we needed to up our technology game, our pricing game, our product game, and our process and service game. And that's what we've spent the last 15, 16 months doing. And you get to a point where people still had the same old reaction where they'd see us approach them on a one-to-one sales call or at a conference or previous AIM Fuse last year or other local and state events that we go to and like, oh, AFR, and they talk about a loan from 4 years ago or 13 years ago, and it's like, gosh, I just don't want to be known for that reputation anymore. Again,
Yeah.
not a bad reputation in my opinion, just a niche product and a niche process that didn't fit the mainstream, so they got the rep that they got, but we wanted to get away from that. And Rob, to his credit, 13 years ago had purchased the name eLend and all the URLs and trademarks and copyrights that come with it. And we were just looking for the right time and the right place to deploy it. And after all the work we did for the last 15, 16 months with feedback from guys like you and your team and other brokers around the industry, it's really, we didn't come up with any magic sauce, KT. We just took feedback from our clients more often than not at the beginning, very raw, very bad feedback. And built that into our business plan. And, if we were a 97% Rotten Tomatoes rating this time last year, I'd like to believe we're like a 90% positive, Rotten Tomatoes ratings. We've shifted it 180 degrees.
Sure.
And that comes through broker partnership, broker feedback, and then just us grinding internally to get better at what we do. And so there's so much new technology we've launched, so many new processes, and it
Okay.
just needed to culminate in a different identity. And eLend is is a cool one to bring to the marketplace.
Yeah, I like it. And that was actually my next question is like, what, how much different do you guys look? And so I would agree a lot of it's technology. Rob has this unique way of getting involved at levels that are really below his pay grade, but he does it anyway. And I
Yeah,
respect the heck out of that man. Now, he
absolutely.
may not say that or agree with that, but when I see a high level guy like Rob, I think of in him his willingness. And I'm wired the same way. You're wired the
Yeah,
same way.
absolutely. That's what it takes.
That builds trust, man, and that goes without. It just says a lot about the person. And
100%.
I've gotten to know you and Rob here over the last, few months, or year, and you guys are you're high IQ people. You guys
Thank
are.
you.
I'm telling
Oh,
you,
I
like, you just
appreciate it,
are,
man.
and not everyone like, that's a gift that is given to you by God. I don't know that I have it.
Oh, you
I have
definitely
other
have that.
things in my life
You definitely
God's
have
given
that.
me. It's so
You got the movie star, or as my wife said when she saw you on stage at Fuse, the NASCAR. Is she a NASCAR driver? Like she hadn't met you yet, right? She'd heard me talking for the last, I don't know, 8 or 9 months about this guy KT Kenneth Travis,
yeah.
and she saw you and she's like, "Is that an actual NASCAR driver?" She, no, that's KT. That's his costume for the event. So, yeah, you got all the skills and you got the good looks. You got the movie star
Yeah.
race car driving looks too, buddy.
I
So there you go.
appreciate it. Yeah, I appreciate it.
Of
You tell
course.
her I said thank you. So,
Yes, I will. I will.
well, let's dive in, man. There's so much to talk about, and let's just take it where it goes. But
Yeah.
we've had a lot of market shifts, and it's so frustrated because you know Powell came out and recently, and he had like a conversation, and he dropped rates, and of course, we had 30, market, we had a 32 point bip increase, or
Worsening.
worsening, and
Yeah.
it was just one of those
Wait,
situations where,
he dropped rates a quarter and the market sold off 35,
yeah,
32 basis points. What's going
yeah.
on here?
Yeah, and we do, and we do. What do we all do? We all educate our clients the best that we can, and it's almost it's not hard to explain if you're in the business, but to explain it to a consumer in a way where it makes sense, that's a little bit more difficult to do. I've seen some
Sure.
loan officers and brokers be real successful at doing it. I've taken a lot of what they've said, reframed it for my market, and I've used it in conversations and with my team. But it seems as though we have lived in a world, Michael, where it's like the day I'm not kidding you. I had rates in the fours, right? For some of these FHA refinances.
Sure.
4.99, 5.25 is about where the market was sitting. And I thought, man, we've got a lot of people that we need to reach out to as an office. And as soon as I pull that refinance list, the day that I pulled it, rates dropped a quarter, but the rates really went up. And it seems like that every time we get positioned to, you know, to feel good about this and confident about this refinance boom, because
Yeah.
this is the challenge. From a broker loan officer perspective, there's a lot of time, energy, and effort that goes into preparing the client for the refinance. And
Sure.
time is of the essence. You don't always have a whole lot of time. You can do strike rates, and you can have and I do that the best I can, but not every customer wants to do that. But it seems like we get to this place where it's going to be a free for all, and there's millions of dollars to be made, and there's millions
Yeah.
of people to help. And then it gets ripped out from underneath us. And like, what do you do? Like,
Yeah. You,
how do you
you talked a little bit
comprehend this
about,
market? Yeah.
now you said it a minute ago, the last conversation we had, it's about building systems that allow you to be prepared to take advantage of when you have to prep the customer. To your point, I think a lot of outsiders looking in, and even some loan officers that are newer to the business, would think, oh, refinances are so easy. Like the customer's in the money, the customer's in the money. There's a psychological effect and a conversational path you have to take them down. It's not just about the money, it's the perceived effort they're going to have to go through documentation wise, getting to the closing, getting to the approval process, getting an appraiser to come through. All those things are mental gymnastics that you've got to be prepared to take a customer through. And you have to have systems and a process to work up towards that, and then stay in front of the client so that when the time is right, and geez, we thought the time was going to be right on the 29th of October when the Fed last met, right? And to your point, they lowered rates a quarter. I think the market was hoping for more. I think the market had honestly priced in more. I think they were expecting a half a point cut. And when they didn't get that, the market sold off the reverse and rates got worse on the 29th. You got to think about being ready for it when it comes, and it will come. And I just think it's a dislocated marketplace right now for really one primary reason. The government's been shut down for, what are we on, week 3 now, almost week
Yeah.
4?
Yeah.
The market doesn't have data. And what we've learned, KT, over our careers is the bond market is data driven, a little bit emotional driven, but more data driven. And there's no data. There's no jobless reports. There's no jobless claims. There's no CPI data. There's no inflation data. There's no nothing. And so the market is very volatile and very nervous right now. And so we broke through the 4% barrier for a couple of days there on the 10-year, and now we're back up to 410, 415 as we sit here on this podcast on October 30th. So there's not a lot of technical reason why the market's doing what it's doing right now. If you looked at where we think things are, we think the economy's gotten worse over the last 3.5 weeks of the government shutdown. We think more jobless claims have been put in. We think inflation is being tamed. We think the economy is starting to sink a little bit, but we don't know because the data is not there. And I think that's what's causing this weird marketplace. So you can't control what you can't control as a loan officer. You know this as an LO and a broker owner. Control what you can control. It's very few things in life, but one of those things you can do is preparedness and systems and awareness for your customers. Learn what they want, learn what they're looking for, learn what that strike price is or that strike rate, as you called it earlier. Learn what their motivations are if they're looking to do a debt consolidation, cash out. Get all that lined up, and then be ready to rock and roll when we do see rates rip, and they will. They will at some point here soon.
Yeah, when I think of what the market does, I think when Powell comes out and says, "Hey, rates are lower," but then the market goes the other way, I think of guys like Rob or other investors who are hedging, and I think, "Oh my God, they just got beat down." Because once you're hedging, you're committed to that price. And when it makes that much of a move that fast, even if it's small, it's still big. The number's still big. And as a broker and loan officer, we don't have to think about that. But I do think about it from y'all's perspective, right? On the lender side, I'm like, oh my God, they're about to get beat down. This is going to be brutal. But then you have to make up for that loss a lot of times, right? You got to make the corrections inside of, and so that just means that rates are going to be a little bit higher for the next couple of weeks most of the time. Is that fair to say?
Yeah, that's fair. I mean, it's interesting. Like, when the announcement was being made on the 29th, Rob is a scientist, as you know, he's a student of the game. So he's up in front of our big screen TV, blasting the CNBC release and listening to the comments and then watching the market rip the wrong direction. He's like, this doesn't make any technical sense. Everything points to a rate rip. And what's actually interesting is calm moves up or down are way more manageable for a lender like us and in our bigger competitors and all of our competitors. It's when the market rips hard one direction or the other that things get difficult to manage. And I honestly say when rates rip lower and the market improves dramatically, that's harder for us as a lender to manage because one, fallout increases because lower rates mean some of those locks you already have on the books that you're already hedging, to your point, they're going to fall out or they're going to come back and look for a renegotiation, both of which, if they fall out or look for renegotiation, hurt our economics. And then two, when rates rip lower like that, we all have institutional relationships with Wall Street where we trade and we use derivatives to hedge, and they'll do what's called a margin call. And so when rates rip down, they say, hey, the value of your hedge instrument with me just went down dramatically. You've got to put some cash in to make up for that. And so for somebody our size, it can be millions and millions and millions of dollars in a half hour that we've got to deposit on margin account with our institutional hedge partners. So what we all want, what every single lender wants in the country, what every broker wants in the country is a slow, orderly move down in rates over the course of time to all of our benefit. It's just never the way the market works, right? It's always going to rip one direction or the other based on, and I'll tell you this, when the news and when the government comes out from being shut down and when the data and the news starts to flow, boy, I'd get ready for 7 to 10 really volatile business days after that because the market's going to take some time to process all of this data hitting all at once.
Yeah. Are you guys doing non-QM type of products?
We aren't yet. We're getting ready to roll that out late 4Q, and we're going to start with DSCR. But that marketplace behaves in the same direction, but it's even more volatile because it doesn't have the backing of the implicit guarantees of the government behind the GSEs like we have with Fannie and Freddie.
Yeah, I would agree. I think that, however, the traditional data that you use, you don't necessarily, I don't know that you'd use that as much in non-traditional or non-QM loans because I guess the performance of the non-QM loans is pretty good data too, especially now that they've become so much more popular in the last 2 years. I think performance data, I don't know this to be 100% accurate, but I feel like they're performing very similar, maybe even better than some of the traditional.
In some buckets, yeah. I think, non-QM is going to behave differently. At the end of the day, any loan that's going into a securitization is going to follow the 10-year, right? Like, there's no way you can escape that. It's going to follow the spread of the 10-year to mortgage-backed securities as well. But what it can behave differently around is how are the loans performing versus their GSE or Ginnie Mae counterparts. And from what we see in the data, generally a higher FICO bank statement loan or an asset depletion loan performs very well. It performs better than, maybe the same cohort for like a government or conventional loan. What we are hearing and seeing very loudly though, and you can read articles like in Baltimore, Maryland. I don't know if you picked up on the story about the couple thousand loan fraud scheme up there on DSCR loans. So DSCR loans don't require much documentation, right, KT? It's an appraisal, it's a credit score on the primary borrower or the borrowers, and it's a property condition rating of C4 or better, and no deferred maintenance that needs to be dealt with for an as-is appraisal, and you're off and running because it's a business purpose loan, and they're so easy to. I don't want to say they're easy to originate because I'm not saying any loan's easy to originate, but they're easier to originate, and those types of loans where the cash flow at origination was below 1%, meaning the DSCR, debt service coverage ratio, was less than 1, or your mortgage payment was higher than your rent intake,
Right.
those are starting to wobble from a delinquency standpoint. We can see that in the data. It's spiked up
Interesting.
almost to 10% here as we sit right now in the
They
fourth
got
quarter.
so popular. Yeah, for
Yeah.
sure. Yeah. So
It's something to pay attention to if you're an originator.
yeah.
By all
Yep.
means, serve your customer and look at DSCR loans if they're a property investor, but at least have a good conversation with them about, are you sure you want to invest in this property if it's not cash flowing? Because
That's
we
it.
have a lot of markets around the country right now where property values are actually declining. And if you're underwater monthly on your cash flow, I'd make the argument 6 months ago or a year ago, like I'd be okay buying a property that was slightly under from a cash flow standpoint if I knew property appreciation was kicking up at 4 or 5% annually or more. But now that it's declining in a lot of markets, and I'd say even most markets around the country, and your negative cash flow, that's not a sound investment.
Yeah, I would agree. Well, let's go back to the originator. Control what you can control. I love that. I think that is very foundational information.
Yeah, I say that, and I believe that in life and at work, right? As an originator, control what you can control in your family life, your friend life, your personal life. But at work, the controllables are stay in front of your client, continue to learn, prepare for different marketplaces, like we talked about a few minutes ago. Prepare for, at some point, a rate run the right direction, a sustained rate run at the right direction, of a meaningful enough move where you've got to be prepared to handle your customers. But also, one of the things we need to control right now, I mean, we're into late October, early November here as we're recording this, and as people are watching this in a few weeks, it's going to be Thanksgiving before you know it.
Yes.
No matter what marketplace we're in, KT, and even if rates rip lower, no matter what happens in every single market, and it's studied over the last 40 years of data, things slow down as winter approaches in every market around the country. Thanksgiving, the holidays, into Christmas, into all the different religious denomination holidays right around that, and in between that, less origination volume happens, and it's every year. And so you got to prepare. And how do you prepare for that? How do you control that? It's spending more of your time building relationships during those moments, right? People are going to be working less, or at least at their office less, but maybe more available for, a hot toddy, a cocktail, a coffee, or whatever, as a realtor, potential referral source, or a CPA referral source. You also have to look at new products. There's certain things that get originated more during 4Q and 1Q than they otherwise would, and that's HELOCs and second liens and cash out refis, where people earn less in 4Q generally, spend more generally around the holidays than they otherwise would throughout the year, and walk out of the holiday season with less in the bank and more credit card debt than they walked in with. And so it's a great time to talk HELOC. So if you look at your product arsenal and you don't have a HELOC or a closed-end second, option for cash out, or taking some equity out, or a smooth partner or two on the debt consolidation cash out side of things on the first lien side, like, you got to be ready for that and control that activity and be ready for that, because it happens. You cannot outrun the slowdown, but you can do things to make up for a little bit of the slowdown with other products and new relationships you're building. Which what you're really trying to do is set yourself up for 1Q when people come back and go, oh my gosh, look what I did to myself over the holiday season. I needed to change my financial picture. How do I do that? Tap my home's equity. The work you do now, you got basically 60 days to prep for the beginning of January, where people come out of that slumber and they come out of that warm cocoon of family, and their bellies being full, and all the presents that they put under the trees, and all the celebrations that they did. They kind of wake up in a panic around January 10th, and we've got to be ready for that. You've got to be ready for that.
I couldn't agree more. I call them activities that matter, or the
Yes.
making activities. And it's always low hanging fruit when you can go to your database of past clients and just look for opportunities. I mean, you can pull out, you'd be surprised. You can pull out in 60 days, you can pull out a few deals, especially if you're focused on it, hyper focused on it, very
That's right.
strategic on getting that data. Without question. I know for me, every November, I do a 18 hour CE class for real estate agents. And man, I have they depend on me for their credits. And so they
Oh,
come to
wow.
class.
That's
Yeah.
fun.
And, you'll have anywhere from 50 to, I've had 110 in my class, very
Wow.
consistently. And so, but of course, I've been doing it for a lot of years. And I have
Right.
sponsors come in, and it's that fall time, right? It's that event. That's relationship building. That's,
That's right.
um, you know, getting in front of more people, also serving them at the same time, and just strengthening that already, partnership. And it's always a great time of year. It's also kind of like a reset. So you can
Yeah.
plan, you can
Use it that way.
strategize, you can reset a little bit, you can
Yeah.
learn. To your point, like, so this is a good time for me to learn some things I want to implement in 2026, and
Yeah.
just sharpen that axe, man, and get substantially better. And that kind of goes into my next question for you and eLand. I remember before I got signed up with you guys and started doing business with you, I had a really good friend of mine who's very successful in this space. He does a really good job, and he raved about how great you guys were. And I thought, oh, I need to get signed up with them. And I did. And we sent, a pretty good amount of business to you, and we had success. But then, like many companies, and I'm just asking, I'm not saying that this is the reality, but do you guys feel like you ever went through um, a, a scalability
Oh,
challenge?
yeah.
Okay.
Absolutely.
And okay,
Yeah.
so I want you to speak to that, because
Yeah.
I can't honestly sit here and say I personally experienced that, but I have heard that, right?
Sure.
But in
I th-
fairness, Michael, it's like that with every lender, right? And I get not I don't get upset, but I get a little frustrated, because you can't be upset with a company for going through growing pains, right? You can take a step back, let them get caught up, and then come back to them. I just don't think it's worth ruining a relationship over, because there's going to be a time or day where you need the
yeah.
investors that you partnered with. And so I wanted you to speak a little bit towards maybe some growing pains that you guys have gone through, what
Yeah.
you've done to fix it, and then what does it look like moving forward, and how are you going to help us brokers win in
Love that.
2026?
Spot on. I mean, I think every lender goes through growth related, uh, growing pains, scalability issues, efficiency issues, where we were on the smaller side. Now we're getting on the mid-size, mid-large size. And
Yeah.
so, we've had a couple of those episodes, a couple of those periods in time where we gotten out over our skis, is the term I'll use internally. Like, hey guys, we took in too many locks. We did too much volume for the process and staff team we had at the time. And that's what Rob and I really focus on with our team. We cannot build what the industry's done to itself 40 straight years in a row, which is scale up with people, lay them all off. Scale up with people, lay them all off. That's just it's not good for culture. It's not good for human capital. It's not good for the people and the hearts that we all have. It's also not good for our clients, because it doesn't really scale. Like, when you get 200% growth in your pipeline that we've had a few times, or 300% growth in your pipeline, you can't just do it with people, because you can't get people up to speed fast enough. They can't flex. Like, oh, hey, we just had 400 more million in locks show up. Let's go hire 20 underwriters and 20 account managers. It takes the average teammate to get up to speed in any company 3 or 4 months of productivity before they're really even making a dent in that loan volume. And by the time you've gotten them up to speed, maybe the loan volume is bled off because people were frustrated with turn times and cycle times. So
Yeah.
what we've learned throughout our growth cycles is you can't do it with just people. We are doing it with some people. We've grown from, small beginnings to a solid team now in terms of size, but we've
Mm.
invested heavily, heavily in technology. Like, that's all we do. We've got an underwriting platform that we have now was brought in June, that's allowed us to go from 2 underwrites a day per underwriter to 10. Right, that's the kind of stuff we've invested in,
Yep.
and we'll keep investing. And that's the eLend brand. That's what it should mean to a broker, is we're going to continue to stay head down, investing in better platforms, so that the next big rate run we have, we can scale with you and not see our turn times go from 2 days or 1 day to 10 days. And we're actually kind of experiencing that right now with AIME's help and with the work that we've been doing. We have added $400 or $500 million to our pipeline in the last 4 months, which is a lot for a company our size, almost double, but our turn times have only gone from 24 to maybe 48 hours, right? And so
Yep.
the moves we made 6 months ago, the lessons we learned from the last time we ran into this, and the investments that we made are paying off now, and we're not done. We're going to keep investing and keep investing and keep investing. So I think that there's a parallel there for the broker community as well, for the average originator, right? Like, don't just keep doing what you're doing. Be prepared invest in systems and process so that when this rate market that we're all hoping for hits, we're all expecting it, you're ready as well from a scalability standpoint in your own context.
I asked you a hard question. That was a hard question. That was a fair question, but it was a hard
Great question.
And I'm glad you answered it honestly. And if you're listening to this is where trust is built with a lender. When they can genuinely be like, yeah, we had some challenges. These are things that we're doing to fix it. And you, the originator, are open to that, because I've been in this business long enough to know that you don't want to burn bridges. You can choose not to cross it temporarily, but never burn it, because I can tell you this, man. I looked in Rob's eyes one day and he was like, we were sharing, and he's like, KT, I'm doing this and this. And I'm thinking, this man and eLend, you guys are about to rock it out, because I've never heard ownership quite speak about how they're embracing technology the way that you guys are. And I thought, oh, they're going to crush it even more so in the next 6, 8, or 12 months.
Thank you. And we want to be in the weeds too. Like, that's what I love about Rob. Like, that's why he and I are great teammates and partners. Is there's no issue or piece of feedback that comes up that's like below us or that we don't want to hear. Like, I literally just introduced one of the brokers we met at Fuse, Nathan from Honest Mortgage Company LLC up in Brighton, Michigan. I just introduced him to one of our account executives and said, hey, here's my personal cell phone. If you need to call me, something's gone awry, I'll dive in. We'll solve the issue together. We'll get the right teammates on to solve it, but then we'll also learn from it, and we'll learn together. And the only way you can really do that as a senior leader is to be in the room where stuff's happening. And it's not always pretty. And more often than not, when you get involved, it's not pretty. Something went wrong. Something failed. We're okay with that. We're okay admitting, shit, it's in the mortgage business. It's going to fail. We're going to break something. Something's not going to go right. Something's going to fall to the floor, but we will run to that fire. We'll pick it up. We'll jump on it. We'll correct it, and then we'll learn from it. And that's what we've been head down doing for the last 14 months. Thus, the need for a new name and a new brand.
Yeah. Well, I want nothing more than for you guys to win. And I know that you will, because y'all got the right mindsets behind it. And if anyone's listening to this and you're not signed up with eLend, man, get signed up with these guys. They're freaking amazing. And I didn't know that at first. I just went off of a referral, and I was so glad that I did. And you guys are closing a lot of loans for us this year.
Oh, thank you for that. Thank you for the faith.
Oh yeah. It's reality. It's the truth. Michael, I'm not just saying this because I want to say it. I really believe it. So I want to ask you one question in closing. What do you want the broker community to feel when they see the new brand name eLend?
We're going to grow with you. We're going to continue to improve. We're going to bring ease, eLend. We're going to bring ease into your lives. Like, Rob and I are maniacally focused with the team on letting a broker on Saturday morning at 11:55 watching cartoons with their kids in their pajamas still on Christmas morning be able to take a loan application, register it, lock it, submit a full package, use big data to bring parts of the full package in without even having to bother their borrower, their client, right? Like, use APIs and data hooks to collect things on a loan. Essentially allow a broker to not have to talk to a human being throughout our entire process unless they want to. And we'll have more than enough people that are highly skilled to do that. And that's what the E in eLend means. E means tech forward, digitized, and ease of use for the broker community. And that's what we are going to get more gray over, get more bags over underneath our eyes, lose more hair, gain more waistline. We're insanely focused, maniacally focused on improving so that brokers' lives are easier and more productive.
That's awesome, man. We certainly look forward to it. And I certainly appreciate your time. And listen, when you guys get so big and you're freaking gigantic, don't forget us little people, right? That were there at the beginning, forget about KT, man.
No forgetting. You are at the tip of the spear and always will be, my friend. Thank you for everything.
Well, I appreciate you, Michael. Appreciate what you guys are doing for the broker community. We appreciate your support more than you know. And again, guys, if you are wanting to get set up with these guys, you can certainly do it on the AIME website and the portal if you're a member. And if you're not a member, get signed up. And Michael, I appreciate y'all's time today, man. Thank you so much.
Shake and bake, KT. Shake and bake from a little inside joke from AIME Fuse. Shake and bake.